Welcome to this explainer. We're jumping right into a massive financial shakeup today, one that is literally reshaping the entire African banking landscape. We're going to unpack exactly how a corporate acquisition suddenly forced one of Africa's most prominent political dynasties to reveal a staggering, previously hidden fortune. It is a crazy story of corporate strategy, mandatory transparency, and generational wealth shifting onto the global stage. And honestly, it's a move that could redefine African banking as we know it. Let's get into it.
Okay, let's kick things off with a huge number, $153.8 million, or if we're talking local currency, that is a staggering 20 billion Kenyan shillings. Just let that scale sink in for a second. We aren't talking about a multinational corporation's quarterly revenue or a massive multi-year sovereign wealth fund here. This is a single, concentrated pocket of individual wealth sitting right inside the Kenyan banking system.
So who exactly does this belong to? Well, this $153.8 million figure is the newly disclosed value of NCBA shares held by Muhoho Kenyatta. If that name sounds familiar, he's the younger brother of former Kenyan President Uhuru Kenyatta and the son of the nation's founding president. With this brand new disclosure, his stake officially becomes the largest disclosed individual holding on the entire Nairobi Securities Exchange. It's a huge revelation, and it's got the entire financial world buzzing right now.
Section 1. The $1544 million secret.
Now here's where it gets really interesting. Publicly, Muhoho was only on the books for 12.7 million shares directly. That was valued at a respectable $8.5 million. But beneath the surface, the new disclosure reveals he actually holds an additional 214.6 million shares indirectly. These are held through various investment vehicles that trace all the way back to the Kenyatta family's long-standing ties with the Commercial Bank of Africa, right before its 2019 merger that formed NCBA. So, the difference between what the public knew and what was actually there, a massive $145.3 million.
To put the sheer scale of this total 227.3 million share stake into perspective, we just need to look at the annual payout. If we calculate this at a rate of 7.1 Kenyan shillings per share, the family is set to collect roughly $11.9 million. That's 1.54 billion shillings in dividends from the 2025 financial year alone. Think about that. That is a phenomenal amount of liquid cash being generated every single year from just this one asset.
But wait, it gets bigger, because the total consolidated banking wealth of the family is even larger than that. Beyond Muhoho's direct and indirect positions, there's a totally separate family investment vehicle called Enki Investments, and they hold another 13.2% stake in NCBA. That's another 217.4 million shares. So as you can see, their total banking equity goes way, way beyond what is just listed under a single individual's name on the public register.
Section 2. Forced into the light. So you're probably wondering, why in the world are we only learning about the full extent of this fortune right now in 2026? Well, it was basically a perfect storm of corporate timing and strict regulatory rules. This transparency was triggered purely by compliance. On December 1, 2025, Muhoho joined the NCBA board as a non-executive director. Because massive acquisition talks with Nedbank were already happening behind the scenes, grabbing that board seat triggered a mandatory disclosure obligation. That forced the release of a shareholder circular on May 4th, putting all these hidden numbers straight onto the public record, literally just weeks before Nedbank's huge tender offer officially opens on May 28th.
Section 3. Deal that changes everything.
And that brings us perfectly to the $855 million catalyst that forced this entire disclosure in the first place: Nedbank Group's pending acquisition of NCBA. This isn't just a simple buyout, guys. It is a complex structural transformation. Nedbank is offering to acquire about 66% of NCBA's issued shares. And the transaction structure is heavily weighted. We're talking 80% in newly issued Nedbank ordinary shares on the Johannesburg Stock Exchange, alongside a 20% cash component.
So, what does the exact math look like for the shareholders holding these assets? Basically, for every 100 NCBA shares you hold, the standard offer gives you roughly 4 Nedbank shares plus 2,100 shillings in cash. Or, actually, if you qualify for the cash-only route, you just get a straight 10,500 shillings. This whole structure is very specifically designed to integrate NCBA's massive shareholder base directly into Nedbank's global equity.
And how is the market reacting? Honestly, this deal is moving at lightning speed.
An overwhelming 77.54% of NCBA shareholders have already committed irrevocable undertakings to support the offer. They are fully, officially on board well before the transaction is even expected to close in the third quarter of 2026. Getting that level of pre-commitment shows just immense confidence in the strategic value of this merger.
Section 4. Dynastic wealth goes global.
Now, for the Kenyatta family, accepting this specific deal means something vastly different than it does for an everyday retail investor. We are literally looking at a generational reallocation of wealth. For decades, this capital has just sat inside a domestic Kenyan banking institution. But now, it's being converted into JSE-listed equity. This shift gives the family's wealth global liquidity, cross-border pricing, and institutional-grade exit optionality on the Johannesburg Stock Exchange for the very first time since Kenya's independence. It effectively globalizes their financial footprint overnight.
And we have to remember what this newly liquid wealth actually sits on top of. It's just layering onto their already massive domestic empire. I mean, their business interests cover everything from Brookside Dairy and Poponi School to Heritage Hotels East Africa and the MediaMax network, which runs K24 TV and Kameme Radio. It is a domestic empire that touches almost every single aspect of the Kenyan economy. Independent estimates already value these domestic assets alone at over $2.5 billion. So this bank equity? It's basically the crown jewel that is now internationally verifiable.
Section 5. What Nedbank is buying.
Now, let's flip the script and ask the question from the other side of the table. What makes NCBA so incredibly valuable that South Africa's Nedbank is willing to drop $855 million to acquire it? Well, the numbers really tell the whole story here. NCBA is absolutely no marginal regional lender. They boast a really impressive 19% return on equity since 2021. But just look at the sheer operational scale, an astonishing 60 million customers across 6 African nations. They manage $5.13 billion in assets, and they disperse over $7.71 billion in digital loans every single year. They are a total juggernaut in the East and West African digital lending space.
For Nedbank, making this transaction is a massive, decisive strategic pivot. Look at their recent history. Back in 2025, they exited a 21.22% passive minority stake in EcoBank. They are completely done with just sitting on the sidelines. By taking direct operational control of NCBA, they can now leverage their global corporate and investment banking expertise to aggressively expand this massive digital footprint into highly lucrative, high-growth corridors. And they're specifically targeting the Democratic Republic of Congo and Ethiopia. So as this explainer comes to a close, we really need to look at the massive ripple effects of this. By forcing previously hidden domestic dynastic wealth out into the open and onto the global stage, while simultaneously consolidating tens of millions of customers under a single operational umbrella, we have to wonder, is this $855 million deal the ultimate blueprint for a totally new cross-border African financial landscape? Are we literally watching the birth of the true African megabank? It's a fascinating development for sure, and one that will undoubtedly reshape the continent's economic future. Thank you so much for joining me to explore this incredible transaction.